Hello and welcome, everyone. My name is Cooley. I'm the Targeted Outreach Director for the California Department of Financial Protection and Innovation. We just go by the DFPI. Thank you for joining today's webinar. It's our financial education webinar we do monthly. And on today's topic, we're going to be talking about your pathway to homeownership. I know it's right at noon, so I'm going to give everyone another 2 minutes to get logged in. I know we have quite a few people registered. So again, thank you for joining. Let's just give everyone another 2 minutes to get logged in, okay? Thank you for your patience. Okay, I have 12:02. Let's go ahead and get started. Again, thank you for joining. Welcome. My name is Cooley. I'm the Targeted Outreach Director for the California Department of Financial Protection and Innovation, also known as the DFPI. Let's jump right in. We have a ton of slides, great presentation. Let's get started. So just a quick disclaimer, your cameras and microphones have been turned off for this webinar, but please use Zoom's Q&A feature to submit your questions. I do have a dedicated time at the very end where I can answer all your questions. I'll answer as much questions as I can. The views and opinions expressed in this presentation are those of the presenter. They do not necessarily reflect the views and opinions of the DFPI. This presentation is for educational and informational purposes only. This is not legal or financial advice, and does not replace any independent or professional judgment. For more information, if you want to copy these slides, which, by the way, we are recording this webinar and we will be publishing it to our YouTube channel, and everyone who registered for the webinar will actually get a copy of these slides, as well as a link to the YouTube channel webinar recording. But if you do want the slides sent to you, you could always email my team at outreach@dfpi.ci.gov, as well as if you want this presentation or any other presentations that we offer provided to your community or other groups, please feel free to email us. Okay. Quickly, I just want to talk about the DFPI. Who are we? What do we do? What is our role? The DFPI is California's financial regulator. Our central purpose is to maintain a fair, healthy, and trusted financial marketplace for all Californians. We do this by regulating a number of financial services, products, and professionals in the state of California. We license things like state chartered banks, credit unions, mortgage lenders, mortgage originators, debt collectors, student loan servicers, investment advisors, that kind of thing. You could always contact us if you have an issue with any one of our licensees. And you could submit a complaint and we will review it as well as try to mediate the issue. And then we also provide free presentations and workshops all throughout the state of California, in person and virtually. We do this to help protect consumers, to help inform them, and to help prevent them from falling prey to frauds and scams. For more information, we do have a dedicated section on our website. It's dfpi.ca.gov/consumers. That's where we publish our news articles, consumer alerts, a list of the different type of events that we do. So please feel free to check out that section of our website. Okay. Oh, sorry. One more plug before we jump right into the content of the webinar. The DFPI offers free online financial education through our learning platform. The link to it is dfpi.ca.gov/learn. It's open to anyone and everyone to use. All you need to do is have an email to register, to access all these different courses and topics, courses on topics such as budgeting, investing, retirement planning, paying for college, home buying, getting out of debt, estate planning. There's lots of different modules that you could take. Again, open to anyone and everyone to use, and we highly encourage you to use it and share it with others. The link to it again is dfpi.ca.gov/learn. Okay, so I usually start with a little bit of motivation, especially for this particular workshop, this presentation, and that's because buying a house in California is, and I'm not going to lie, as a homeowner, as someone who went through the whole process myself, it can be very daunting, scary, and sometimes frustrating, right? Homes are expensive in California. That's, I would be naive if I was to say anything otherwise. And commonly, many people tell me who come to my workshops, they believe that they're just throwing money away by renting. And I, in my opinion, would say you're not. What you are doing when you're renting or leasing an apartment, or if you're just roommating it with friends, what you're doing is you're buying time, right? You are spending money, but what you're doing is you're buying time, and you're doing that time. You need to prepare, right? The time to find the right home for you. I would never suggest anyone try to buy because everyone else is buying, right? That's got that FOMO, that fear of missing out. And the other thing you don't want to do is buy out of desperation, right? You want to be this. You want the situation to be perfect for you. And as a friend has always said to me, you want it to be a dream, not a nightmare. And that's what you're doing, right? If you're renting and you feel like you're just throwing money away, you're not. You're buying time to prepare yourself. And that's what this whole webinar is going to be about, right? Path to home ownership. It's about preparing, getting ready to find that perfect home for you, be financially able to, right? Financially comfortable, and kind of knowing all the aspects of it. Okay. One thing I always suggest everyone does, especially when they're in that home buying process or even just thinking about it, create a timeline to achieve your dream, or create a timeline to buy your house, and give yourself plenty of time. Don't say you're going to do it in the next 30 days. That's kind of crazy, especially if you're starting from scratch. Give yourself enough time in the next year, the next 5 years. And what you want to do is build those little milestones in, right? Save up for a down payment, improve my credit, start the home buying search, work with a real estate agent, put all those into your timeline. And what it really does is it helps alleviate that anxiety, especially of the unknown. And many times when people come to my workshop, especially the home buying workshop, they have that anxiety because they don't have a plan in place. But when you put a plan in place, you kind of, all that stress and anxiety of not knowing what to do or what's to come next is usually alleviated, because again, that plan is going to help you. The other thing I recommend you do is share your dream with others, right? And it's honestly a common dream. It's the American dream to own your own house, right? And when you tell individuals about it, friends, family, coworkers, oftentimes you'll find that they're going to be supportive of you, and they might be on the same journey as well. So you can share your dreams, as well as kind of give each other tips and support. Finally, I do want to share two quotes, right? This one comes from Seneca, which is a Roman philosopher. Luck is what happens when preparation meets opportunity, and that's what you want to do. You want to prepare yourself so that when the opportunity comes, you're able to seize it. Here's another one from Abraham Lincoln. I will prepare, and someday my chance will come. Very similar to what Seneca says, but that's basically be ready when the opportunity comes. You could take a chance at it. And finally, one more from Dave Ramsey, who's actually a financial guru. You can control the controllables. In other words, there's things out there very oftentimes, and I'm sharing a lot of experience from other workshops I've done. Many people are stressed about the uncontrollables, right? The economy, the AI, and all these other things that are happening, new technologies. You can't control those. So in my opinion, what I always tell the individuals is, hey, don't worry about that stuff. That stuff is going to happen, right? You can't control it, so there's no reason to stress about it. And what you should do is control things like your budget and how you're spending money and saving money and building an emergency fund, right? So those things are the controllables. And when you have that ability to know what's happening as well as be able to control what's happening within your own realm, a lot of that other stress of what's happening outside kind of just disappears. Okay. So, polls questions. Yes. I always, this particular workshop, I always do a poll because I kind of want to know what's going on with everyone. The first poll, if it gives me the options here. Okay, so question number one. Question number one, where are you in the process of buying a house? And it's kind of a short answer. I used to have this multiple choice, but people felt like there wasn't enough answers. So please feel free to just type in your answers. I want to read them because it's going to help me better customize this presentation to you. Maybe many of you are further along the home buying journey process, and I'll focus on that. Maybe some of you are just starting out, and so I'll kind of focus on that. So please feel free to type in your answer, and I'll be happy to. I would say I'll read a few of them, and then kind of again, it helps me understand what is next or how to better customize this presentation for you. And if you're on to that next question, by the way, the next question is in regards to the home buying process. What are you most interested in? What do you want to learn? Again, I have a lot of content and maybe some slides. You're already, the majority of you guys, I'm looking at some of the answers here. Majority of you guys are already way past it. So we could just fly through those slides and focus a little more on the more important stuff. But yes, thank you for answering. I'm seeing a lot of questions coming in, or a lot of answers coming in. And I will give you another 30 seconds to type in your answers. Just checking some of these. It's good. Very good. Good. Okay. 10 seconds. I'm going to close the poll. So again, two questions here. Where are you in the home buying process? And of course, in regards to the home buying process, what are you most interested in? What do you want to learn? I have a couple different questions. Look, it's coming from, and I'm not going to answer it right here. I'm going to try to hold it till the end. We have a Q&A section. You can also put in your questions. Looks like one came through the Zoom's Q&A, so I'm going to try to answer those at the end. But thank you. This is great. Okay, ending the poll now. All right, let's move on. Great questions. Okay, I know many of you, since you're here, you're interested in buying a house. So let's just talk about why buy a house. I know you already have your own reasons, but I kind of want to add a little bit more for you, right? So unless you've been gifted a home, renting or leasing or paying a mortgage will almost always be your single largest expense, regardless of what life stage you're at, right? So you might be just out of college, or maybe you are, near retirement. I've done a lot of budgeting workshops, and almost in every single case, there's only been one exception. Almost every single case, everyone's rent or mortgage is their largest expense on their budgets. So why buy a house? You want to eventually pay that off, so that lease, that mortgage that you're paying off, that money could be used for other things, right? Paying it down debt, investing, retirements, emergency fund, that kind of thing. Equity, the whole value of your home will almost always increase over time, right? Looking at it historically over time, not in a day, not in a year, but over time, your value will build equity, especially as you pay off your mortgage. Inherited homes, or the proceeds from a sale of a family home, is a transfer of wealth from one generation to the next. And this is actually a slide that comes from my generational wealth presentation. And so we talk about how homes are a great way to, whether you're passing it on to the next generation or you're going to be selling it, and then the proceeds go to your beneficiaries. It's a great way to give them a jump start into their lives. And again, owning a home can serve as a form of forced savings, right? Homeowners are more cautious about their spending and saving. And finally, you can always okay, always there are many companies out there that offer home equity line of credit. That's what the HELOC is for. It's the ability to access that equity in your house through a loan. I personally would not recommend it because it has a lot of debt issues. But if again, it's one of those things in an emergency, you can always access that home equity. There's many companies out there that will do that for you. Okay, so I always want to share this. This is a new slide because I get asked this question a lot. The biggest question I always get asked is, when is the best time to buy a house? So this is mostly from individuals who are trying to time the market, or they're trying to build a down payment or something like that, and they're not sure what home pricing is, or rates, the loan rates are about. And I always give them the same answer, which I think is the best, which is when you are ready. The best time to buy a house is when you are ready. And what does that mean? That means you have a down payment. That means you're on a budget and you understand what your finances look like, right? That you're very comfortable with the finances. I would not say I don't think you should try to time the market, or time interest rates of some sort, right? Try to hit that high low. I think when the perfect opportunity comes along and you are prepared, right? You have a down payment saved, and you find the perfect house. That's time. That's when you need to seize the opportunity, right? And the opposite of this is, if the perfect opportunity comes along, right? Interest rates drop, and then of course home prices drop, and you're not ready, then you're not able to take advantage of that opportunity. So when you are ready is the best answer. Okay, let's talk about path to home ownership, right? Buying a house is a significant investment and is a step towards building generational wealth. It is a long and difficult process, okay? I don't know anybody who's ever gone through a very quick and easy home buying process. I don't know anybody. Even individuals who have done it cash, like just bought a house cash, there is still a process to it. You don't want to rush into this investment. Like any other investments, you want to do your research. You want to take your time. You want to be careful. You want to get help. Okay, you're probably not a real estate professional. You're probably not a mortgage professional. You're probably not, all these different types of home inspection, home repair specialist. Right? You're probably not all these types of specialties, professionals. And it's better to get advice from people who are professionals, right? And of course, do your research and start the process now. And we're going to talk about that process right here. So right now, I'm going to talk about the home buying process. And many people kind of get a general idea. Honestly, there's nowhere there. There's lots of videos on YouTube and other places. Maybe a family friend can walk you through the home buying process, but there's no school. There's no course on where you could just learn how the home buying process works. And that's kind of the whole point of this webinar. It's again, another resource for you to learn how you can, the home buying process, the home buying journey goes. So the first step is preparing. And I have a ton of slides here. I'm gonna fly through some of them just for time purpose, but what I want to emphasize is preparing is about, in my opinion, the preparation is about 75% of the battle. When you are prepared, everything else goes a lot more smoothly. It's not perfect. Nothing ever is perfect or risk-free. But what I would say is everything goes a lot smoother when you are prepared. So questions you want to ask yourself is, what are your home needs and wants? The other thing is, do you have a budget? Because you're going to need to. How much of a home can you afford, right? And what is your credit score? So I'm going to go through a lot of these things, and of course, definitely want to save for a down payment. There's very rare instances where there's certain loans have a zero down payment requirement. So let's talk about determining your home needs and wants, right? Here are some things to consider as kind of popular items, right? There might be other considerations depending on what your lifestyle is and what your needs are. But that's the question here. What is my needs? What are my wants? Again, we would say real estate professionals talk all about location, right? Location. And that includes things like, what is my work commute going to be? Do I have access to transportation, public transportation, or even quick access to like highways? What are the schools, local amenities? Does the location, will I be okay with having a house in an HOA community, right? Other things you want to think about is like total home size, number of rooms that you might need. Again, need, not want, right? I'm sure everyone here wants to buy that 10-bedroom house, but we don't really need it. And the story I always share here is I had a family member. They bought a house late in their life. In other words, they have two kids going off to college, and they decided to buy a home that would have a room for each one of the kids, which is great. They could afford it. But now that both of their kids went to college and one of them graduated out and is working somewhere else, they have all these empty rooms now. They just kind of feel like they've overbought their house. But to each their own, right? Home construction amenities, right? How old is the house? What are the amenities of the house? Is it a pool? Do you want a pool? Like a hot tub? Solar. Does your house have solar? How old is that solar, right? There's a lot of different things to consider. Maintenance and utilities. Again, older homes are probably going to need a little more maintenance. Newer homes might actually have a warranty still on it. And then, of course, utilities, right? You buy that 10-bedroom house. It's going to be pretty expensive to keep that 10-bedroom house nice and cool in the summer and, of course, warm in the winter. So those are things you want to consider. And then, of course, local taxes. Certain local municipals have different tax schedules and tax amounts. So you definitely want to check on that. And then home resale value. Something I didn't add here is insurance as well, right? How much is going to cost to insure your home? That's a big hot topic in California when we're talking about like fire insurance and earthquake insurance, flood insurance. But of course, you have your home resale value as well. If I buy this house and if I want to upgrade later on in life, will I be able to get any kind of value out of it? Again, depending on the maintenance as well as the home construction, other amenities. Is that hot tub that I'm buying with the house really going to help the resale value? Right? Things like that to consider. Okay. We're going to talk really quickly about budgeting. The most important thing about budgeting to know is that you want to set and meet financial goals. This is actually a slide that comes out of my budgeting workshop. And we talk a lot about setting financial goals because let's be honest, no one here budgets just a budget, right? No one's here enjoying a spreadsheet or just counting money or counting numbers all the time. We all budget so that we can set and meet that financial goal. So that financial goal could be saving a down payment. It could be buying a house, right? Paying off debt. So again, setting and meeting the financial goals, that's one of the big reasons why you want to budget. Of course, you also want to learn where your money goes, create financial stability, build healthy saving and spending habits. That's a big one. It takes time. That's the thing when you start budgeting and personal experience, right? The first couple months, you're just kind of grinding through the process of budgeting, and then it just becomes more of a habit. And then, of course, that habit kind of transitions into that savings and spending habit, right? It'll help you with a budget, prioritize spending, paying down debt, build savings. It'll help you prepare for emergencies, right? If you add that into your budget, you want to have that emergency fund. And of course, for many people, budgeting definitely helps them manage their money. I'm going to quickly talk about credit scores. So you want to know and protect your credit, right? Get your credit scores, consider getting a credit freeze. I have a whole slide where we'll talk about that in a minute. You also want to start building your credit, especially if you don't have credit or if you've never really used your credit. And that's all about, again, going back to knowing what your credit score is. Consider using a secured credit card or a credit builder loan. Certain banks, especially credit unions, offer those things. I can talk more about it if you're interested. Just put it into the chat or put it into the Q&A, and I'll definitely talk more about that. You also want to practice responsible credit habits, right? Paying bills on time, limiting new credit applications, not maxing out your credit cards or other loans. That'll help you improve your credit and also correct any errors and disputes, right? That, again, about getting that credit reports. You want to look for any errors and any kind of issues, maybe a credit card that you've been paying off regularly. They say that you didn't pay for a certain amount. You want to dispute that because that could definitely hurt your credit score. And of course, you want to be patient and consistent, right? Good credit takes time. And if anyone, by the way, a company, an individual saying that, oh, I can increase your credit score by 100, 200 points in a week or so, that's a big, big red flag, right? Good credit takes time to build. And you want to, again, part of that timeline, building that timeline for your dream. You want to, if you have credit issues like no credit or bad credit, you want to give yourself enough time to repair that credit. This slide comes to us from our friends at cred.org. They're amazing. I love them. It's a nonprofit organization. These are the 5 factors that make up your credit score, right? 35% is your payment history. So if you've been paying on time, right, no missed payments, you've been finishing all your payments, your loans, and wrapping all that up. 35% of your score is already good. Okay, 30 other percent is amount owed. Right, again, not if you're maxing out your loans, credit cards, that's kind of a negative for you, right? Another 15% is credit history. So sometimes, and this is a common question I get in my credit workshops, where people say, well, if I close down a credit card account or maybe a loan account, like I pay it off, my credit score goes down. What's that all about? And again, it's about that, right? 15% is that credit history. If you pay off a car loan that you've been paying on for like 5 years, maybe you have a credit card that you've had for 10 years and you close that account, you're going to take a hit, and that's because it's credit history. But again, it's all about building, right? As time goes on, your other credit accounts will still continue to be there, and that's going to help improve your credit score. Then you have like new credit and then of course different types of credits, right? So this is a general idea on what your credit score is built out of. Sometimes things like you don't have enough types of credit, right? Or maybe you have too much money that you owe, right? That might negatively affect your credit score. And so again, get your credit report. You can always check your credit score and figure out how can you improve your credit. This is a common question I get, whether it's in my home buying workshop, my debt workshop, whether it's the credit building workshop. This is kind of just a common thing to know. And again, it's not a mystery. Okay, let's talk about credit reports just really quickly. Just going to go through this. There are 3 credit bureaus, and you could get a free copy of your credit report once a week. You'll still need to go to annualcreditreport.com. You're going to create a profile, probably a PIN number as well, and then it'll give you a report about your credit. Now, it doesn't tell you credit score, but it'll tell you all the accounts that you have. So things like credit cards, loans, student loans, things like that. Anything that you've opened up, and it might go as far back as have things that you've already paid off, and that's good. You just want to look at it. Now, if you do notice any kind of credit cards that have been taken out in your name or loans that you don't recognize, that's big red flags, and you need to dispute those with the credit bureaus, whichever one's reporting that. The other thing I want to talk about is freezing your credit, right? Especially if you don't plan to get a new loan or a credit card or any of that. If you don't plan on using your credit anytime soon in the near future, consider getting a credit freeze. You'll need to go to each of the credit bureaus, authenticate your identity, and then probably have a PIN number as well. But you'll need to go to each credit bureau to freeze your credit. But the good thing is, once you freeze your credit, you could still use your credit card, debit card normally, no problems. But not only you, so scammers, identity thieves, and you won't even be able to open up a new line of credit, a new loan, mortgage, without unfreezing your credit. And that helps you, again, protect you from identity theft. So consider doing that. It's a great thing, especially like I said, if you're looking at your timeline and you're looking that you're not going to buy a house in the next year or 2 or so, freeze your credit, right? Again, protect your credit as well as your identity. Okay, I do quickly want to talk about debt to income ratio. There's a lot of text right here. I apologize. What is debt to income ratio? It's essentially your monthly debt payments divided by your monthly income, right? And so this ratio is a way for mortgage companies, loan companies, anybody, to identify whether you're going to be able to meet loan qualifications and get approved, right? Having a lower debt to income ratio can, again, help you meet loan qualifications and get approved. It can also help you qualify for better interest rates and terms. It may help you qualify for a larger loan, right? If you have too much debt, mortgage lenders may not want to give you a larger loan because you're a higher risk of defaulting. And then, of course, it gives you financial flexibility for saving, investing, or covering other expenses of owning a home. Again, knowing your debt to income ratio and then, of course, paying off debt will give you that financial flexibility. Okay. Quickly want to talk about some research on loan programs and grants, right? I have a couple slides from the California Housing Finance Agency. It's Cal HFA. They're amazing. They have down payment assistance programs. The link to their website is calhfa.ca.gov. Check them out. We'll talk a little more about them. There's also the U.S. Department of Housing and Urban Development, also known as the HUD. They have home buyer assistance programs as well. Also, a housing choice voucher program. So check those out. There are certain qualifications that you need to meet. If you're interested, it's available. Again, do your research. Find other resources out there to help you in your home buying process. There's also the National Home Buyers Fund. Just going to plug them. Check them out. They have grants from time to time as well. Check out your city. Your city grant and communities sometimes have home buying grants, right? So check them out. They might have, it might not be a lot, it might be a good amount depending on what qualifications that you meet. So check that out. And then of course, your local banks, credit unions may have grant opportunities as well to help you buy a house. I know for sure. I went to a resource fair, and right across from me was a local bank. It was actually a local credit union, and they were offering a grant to help individuals pay for their not down payments, pay for their what do you call it, closing costs, right? Up to I think something like $15,000, which is a lot of money for closing costs. It was a great thing. Again, I'm not going to plug them here, but what I would say is that was a great thing that they were trying to get people to sign up for. And I would say if you have a great relationship with your bank or credit union, or you just want to do the research and see what kind of grant opportunities are out there, check them out. Okay. All right. So that's preparing, by the way. That was just step one. A lot of different slides, a lot of information to consider. Again, like I said, I believe 75% of the process, just getting ready, is preparation, right? That's step one. Step two, you want to get pre-qualified for a mortgage, right? This is the process that gives you an idea how much you can afford to borrow or spend on a home. Again, gather your information. You want to choose a lender, and I highly recommend you shop around. Just don't go to the first mortgage lender. Don't go to the first commercial you hear or Google ad that comes up. Shop around, see what kind of rates they have, see what kind of benefits they could give you. And then, of course, check your mortgage lender's information on the DFPI's website. To be a mortgage lender in the state of California, they're going to have to be licensed by us. And so check out make sure they're licensed, make sure they're in good standing, make sure they don't have any issues with their license. And there's a link to our website right there. Continue on. So step two, you want to complete the pre-qualification application and get a pre-qualification letter. This is something that's going to help you during, of course, the home buying process when you're going to open houses, or whether you're thinking about buying a new home. That pre-qualification letter is kind of that step in the door, right? People see that you're serious, you're qualified. A bank, credit union, mortgage lender has reviewed your finances and says that, hey, we're willing to fund a mortgage for this particular person, right? That pre-qualification letter is going to help you in the next steps. As a reminder, a pre-qualification letter is not a guarantee approval. It's just a formal approval. To get a formal approval, you're going to need to provide more documentation and undergo a more rigorous process. Again, this pre-qualification letter is just saying to sellers, home sellers, companies, that you're actually very serious about this. You're not just someone who's browsing the the open houses, right? Okay, step three, you want to find and contract with a real estate agent. A good agent can help you navigate the whole entire home buying process, right? And by the way, step two and step three, right? I get this a lot. Should I get pre-qualified first, or should I talk to a real estate agent? I think you could actually mix and match, right? You could do this as your step two, and then get pre-qualified. Sometimes some real estate agents work with mortgage companies and you get a discount or some kind of benefit. But again, a good agent can actually help you through that home buying process. Of course, help find the right home for you. And then you want to make sure that that agent is licensed with the California Department of Real Estate. More slides from them in a little bit. But the CalDRE, they're amazing. You definitely want to have a licensed real estate agent selling and managing your whole home buying process. All right, step four, finding your home. Again, we talk about determining what your needs are. I know you might have wants, and that's okay. That's okay. Have a list of your needs. We need this. And then you can have some list of your wants, right? If it has a pool, great. If it has a third garage, that sounds good too, right? If it has attic space where you can use a storage, that's not a bad thing, right? That's a want. It's not necessarily a need. And so when you do your home buying, right, when you're going out there looking at open houses, you kind of have that list of needs that you got to check off on, and then you can move into your wants. Consider the maintenance costs of owning a home. We talked a little about that. Don't forget to ask about HOA fees and special taxes. You do not want to get surprised when you're suddenly in the escrow process, right? You're in the process of inspecting the home just to find out that this home has an HOA, right? Homeowners Association. They have crazy fees and they have some very crazy requirements. So ask about the HOA fees, especially when you're walking the house. When you're a real estate agent, they should know, by the way, is giving you a tour or you're just doing an open house visit. Ask them about if there's any HOA fees. Again, work with your agent to find the home that meets your needs and budget. And then we move on to step five. That's when you make an offer. And once you found the home you want to purchase, again, we talked about doing your research, right? All during the preparation. That's going to make this step really smooth, right? Knowing the location, the schools, amenities, understanding market conditions is, I would say, it's important. Making sure that you're not overpaying for the house. So you want to look at your comparables, that kind of thing. Consider the property's condition, right? Oftentimes, I hear this a lot, whether it's during my home buying workshop or other things, people feel like they purchase a house out of fear or desperation, and they start finding out that the home was renovated very poorly and there are certain issues, right, that they have to fix later on. Consider including a letter with your offer, and this was part of a thing that I went through. A couple of homes that I put offers on, they required a letter and some of them didn't. So I just kind of had a couple different standard letters that I wrote, and it kind of talked a little bit about myself, my family, why I want to buy a house here. And sometimes it makes a difference. It really does. Again, then you want to work with your agent, of course, to submit your offer. Don't just walk up to a home seller and say, I want to buy this house. Here's my offer, right? You work with your agent. That agent is going to understand the whole process and help you submit that formal offer. All right, step six, negotiate. Again, expect negotiations. Be flexible, be very flexible. It's rare that you would actually pay asking and just everything goes smooth. There might be some things that you want fixed before you buy the house, and there might be some other considerations, right? Set your limits. Don't chase an offer, especially something you can't afford. Again, if you're buying a house and there's multiple offers put in, and they're asking people to put up increments of $2,000 to $5,000, don't chase an offer. I know it might seem like it might be the perfect house, but if it's outside your budget, this dream is going to turn into a nightmare, and that's what you don't want. A good real estate agent is going to be able to provide expert advice and help you negotiate. Step seven, really important. Don't skip this, especially if certain homes that are trying to sell, they say no inspections, right? That happens. You're looking at a house, it looks like a great deal, and one of the contingencies, one of the things they say is no inspections. That's a big red flag, okay? That home inspection is going to help you understand or know about any potential defects or issues. Of course, you're buying something, you're making an investment, and you want to take the time to do your research and find out that it's going to be a good investment for you. So there's a lot of things here, right? Consider getting a termite inspection, a pest inspection. Your home inspection is very important. Again, that home inspector is going to should be very thorough, document any things that should be fixed or are not up to code. That happens very often, where homeowners, home sellers have made modifications that are not up to code. So you definitely want any kind of electrical or plumbing that was done by the previous homeowner fixed to code, right? Because that code might actually not be, if it's not to code and you try to get insurance on the home, and your insurance agent or individual sees that, they might require you to fix the code before they insure the house, right? So little things like that. Ask the seller if they'd be willing to make repairs or fix any kind of updates they made to the house, right? Sometimes they will. Sometimes they'll be like, oh yeah, we put in that hot tub and we just plugged it into the wall. That's not how it's supposed to be. So we'll remove it. We'll fix it all for you. That's ask them. You never know what you're going to get if you don't ask. Okay, step 8. get an appraisal, right? Many lenders will require an appraisal to determine if the home loan will cover the value of the house, right? If it doesn't, you might need to renegotiate with the seller or pay additional for any cost. So if you're buying a house, the asking price is higher than what an appraisal comes in at, you might have to pay that difference. And the reason I just put it here is, number one, you want to make sure that you're paying for something that's going to be worth it. But number two, this is not going to be a surprise, right? Very oftentimes, mortgage lenders as well as real estate professionals will tell you, hey, we need to get an appraisal. We got to make sure this house, the mortgage that you get is going to be worth the house that you're buying. Finally, we talk about closing, and this is, in my opinion, where a lot of my stress happens, right? But if you're well prepared, everything should go smooth. It's the final step in the home buying process, right? You're going to sign documents, pay closing costs, it's really important for you to budget for these closing costs. And here's just a small list, by the way, of common fees that are part of that closing cost. So things like loan origination, appraisal, attorney fees, title insurance, homeowners insurance, property taxes, and the list goes on, right? And there's more sometimes. The good news is, by the way, when you are buying a house and you're at closing, make sure that they give you a line item breakdown of all the closing costs, right? If the closing cost comes down, they say, oh, you just got to pay $12,000 for closing. I want to know what's in all those closing costs, right? What is my $12,000 going to? Break it down for me. And by the way, any mortgage professional, any real estate professional would and should be willing to sit down with you and go line item by line item telling you about the closing cost. And one of the things I want to say is sometimes they sneak in fees. Okay, some of the more shady individuals sneak in some extra fees that are optional, and you may not want those fees, or those fees are just kind of like junk fees. Make sure you review it, right? Some people I know are just, I'm happy to close, and whatever closing costs you want. And I would highly recommend not doing that. Okay. Let's talk about some common mortgage scams and frauds, right? The first one by far is imposter scams. Not just different types of home buying scams, but this is where scammers are posing as maybe your real estate agent, your mortgage lender, your home seller, and escrow companies or others. They're just posing as individuals, professionals, businesses, and like I said, even home sellers. They're posing as them, and they might ask you for things like your down payment, your financial information, your personal information. Be very careful, right? Authenticate, check credentials, and make sure it's the right person, it's the right account you're sending money to before you move forward. Okay. Property title scams, that's where someone offers to give you a loan or fast cash for taking over your mortgage or title. So be very aware of that. Loan modification scams, right? That used to be a really big thing during the not just the pandemic, but also during the first, what is it called, Great Recession, where people were in bad loans and they're trying to modify the loans. Again, be careful. Read the fine print and make sure that you're working with a licensed mortgage professional. And then interest rate bait and switches. So that's where mortgage rates might have a very lower, like a very low interest rate, and it looks great, but there's typically a lot of other hidden fees to try to offset that, and also there might be some other small details in the fine print. So definitely check on that. And finally, home loans closing scams, right? This is a scheme where a scammer steals your banking information, especially if you're trying to close a home loan. The story I share here is in LA. There was a woman, a family. They were in the closing process. On her social media, she published that they're closing on their house in the next couple of weeks, right? Well, a scammer saw that. They contacted her through Facebook or her social media, and they said, hey, I'm your escrow company. We need you to pay for your down payment right now, right? Please wire this money to this account as your escrow company. Now, again, she's a first-time home buyer. She didn't know any better, so that's what she did. She wired her down payment to this quote unquote escrow company, more is actually a scammer posing as her escrow company. And then her down payment was gone. And the only time she actually knew she got scammed is when her actual escrow company contacted her directly and said, "Hey, we need you to provide your closing costs, which includes your down payment." And so she said, "What? I already did this." And so she found out that she got into a scam, and it was very tragic. So again, that's a thing. Be very aware of it. One thing: don't share too much information on social media. Right? You could don't share it after you've purchased the house. But the other thing is, yes, be very aware of these different types of scams. Okay, I do want to talk about the California Department of Real Estate, also known as DRE. They're an amazing partner of ours. They presented at this webinar before. I didn't have enough time for them to present, but I just want to fly through their slides really quickly because they are so important for your home buying process. So the first thing is they have a ton of different educational resources. They publish on their website consumer alerts. On their website, you can also verify real estate licenses. So you want to make sure your real estate broker, your real estate professional is licensed and in good standing, right? You can also find a guide to residential tenants and landlords' rights and responsibilities there. The website for them is dre.ca.gov. Specifically for the consumer section, it's dre.ca.gov/consumers. And then they have a podcast available in English and in Spanish. There's a link to it there. More about their podcast. They cover a lot of different topics. I'm not going to read all this whole list, but I would definitely encourage you to check out their podcast to learn more, especially if one of these topics relate to you, right? So how to find a real estate agent, how escrow works, making an offer. Again, all these topics on their podcast. Definitely check it out. Again, we talked a little bit about how to verify real estate professional licenses. Definitely want to look it up on their website. Here's a screenshot of it. On that licensee lookup, right, you want to make sure that the real estate professional license is active. Make sure their license is not expired, and very important, you also the information matches. I've heard stories of where real estate agents or even scammers are using a legitimate real estate agent's information. And so again, check this site, make sure all that information matches and that it's a legitimate real estate professional that you're working with. I'm not going to talk too much about this. These are the different kind of issues that could be on when you look up real estate professional, right? When you're on this website looking up a licensee, real estate professional licensee, this kind of disciplinary actions might be there. So things like accusations, desist and refrain orders, citations and fines. You want to look for that and make sure that your real estate professional doesn't have any of these type of things, right? And then again, another long list of different frauds to look out for. I'm just highlighted a few for your information. So be extremely wary if a seller is asking to be paid in cash. That's almost always a red flag. If you come across any programs or companies that claim to be federal or state agencies or programs, right? Double check, make sure that it's legitimate. Go directly to that website of the federal or state agency to make sure that that is a legitimate program. All investments carry a risk, right? It's, buying a home is there's a risk. So you always want to make sure if someone is trying to say that this is a risk-free purchase, your home value will definitely go up. That's kind of a red flag, right? So just be aware of that. You also want to always, in my opinion, do business in person, right? If you're a real estate professional, if you're mortgage lender, if you're escrow company, if your home seller does not want to meet in person, that's a big red flag, right? Home buying is a big investment. You definitely want to meet someone face to face, get a handshake, make sure that they're actual person and not just someone AI generated. And of course, if someone is encouraging to make payments to someone other than your mortgage lender or servicer, that's also a big red flag, right? Double check. If someone's sending you a bill saying this is your new mortgage payment, you need to pay us, that's a big red flag. Definitely want to double check and make sure if that's the legitimate place that you should be sending your mortgage payments. Okay, quickly talk about how to file a complaint with the DRE. Of course, you go to the website, right? You could download the complaint form and mail it in. You could fill it out online. And this is if you have an issue with like a real estate agent or professional broker. You can file a complaint, and then they have an 800 number where you call them, and they will mail you a form. If you're not down with downloading it and printing it, they'll mail it a physical form for you, so you could just hand write it and then mail it back to them. So yes, many different ways to file a complaint with the DRE. Now I do want to quickly talk about the California Housing Finance Agency, also known as Cal HFA. Again, amazing organization. I love them. We partner with them on a lot of things, and I see them at a lot of different resource fairs. So they want you to go out and use their service. What are they? Well, they offer down payment, a down payment. Well, they offer many different programs. One of them is their down payment assistance program. There are borrower requirements. I'm not going to read it all. Again, didn't have enough time for them to present today, but I do want to plug them since they're so great. There's a home buyer education requirement. In other words, you need to take a course before you could be a part or take part in their their down payment assistance program. There's a link to learning more about what properties are eligible for their down payment assistance programs. These are the type of different government loan programs they have, right? So they have their HFA loan, they have their VA loan program as well, and then a USDA program, which is for like farms, right? If you're looking to buy farmland and farm. So they have a lot of different government loan programs that you could take advantage of. I'd say go there and do your research, right? I'm not a Cal HFA professional, but they have a lot of different options for you when you're looking for down payment assistance. Here are some of their more conventional loans, right? And again, it's basically an interest rate free loan, Cal HFA conventional loan, interest rate free for a down payment assistance. So two different ones. Again, read up more on it. I want to make sure I get enough time for your Q&A, so I'm kind of flying through these slides. I apologize. But Cal HFA, they're amazing. So more information about their down payment assistance, right? Junior loan amount of up to or lesser of 3.5% of the purchase price. Oftentimes it's enough to cover for your closing costs. So yeah, please check that out. It's a great program. Finally, as a reminder, the DFPI is here to protect you and your community. Please contact us if you observe or have been a victim of a scam, financial fraud, or abusive business practice, things like predatory lending. If you observe any kind of financial elder abuse, please let us know. We work very closely with APS, Adult Protective Services. And also, if you have any questions about a financial product, professional company, call us. We do have a phone number where you can call, and you can always submit a complaint to us where we will review it and then try to help mediate those issues. The link to our online complaint form, which by the way, you can also download a form, or if you call us, we're more than happy to send you a physical copy as well so that you can fill it out. The link to our form is dfpi.ca.gov/submit-a-complaint. All right, Q&A. Wanted to make sure I have enough time for a Q&A. Looks like a couple different questions here. As a reminder, if you do have questions, please feel free to submit it, type it into the Zoom's Q&A feature. I will be answering it right now during our Q&A time. The first question is, what is PMI and why am I required to get it? So PMI is private mortgage insurance. Depending on what loans you get and how big of a down payment you have, some loan companies require you to get private mortgage insurance, right? PMI. And that's because, for a number of different reasons. The biggest one is so that in case you default or if you miss or you just no longer pay for the mortgage, that private mortgage insurance is going to help compensate the mortgage company on their losses, right? So again, you're probably going to be required to get it if you submit or if you don't have a down payment of 20% or more, right? So if you have, let's just say you have a $200,000 loan, right? A mortgage loan. If you put down 20%, which is like $40,000, you may not be required to have private mortgage insurance. But if you only put down like 5%, which comes out to be something like what, $10,000, you may be required by the mortgage lender to have PMI. And the good news is PMI is not forever. I would definitely talk to your mortgage lender if you're looking at mortgage companies and ask them, hey, what is your PMI requirements and when will the PMI be lifted, right? When will I no longer be required to pay for private mortgage insurance? Because certain companies have different thresholds. Most of it is at 20%. Some of it can go higher or lower. So definitely check that out. Great question. Thank you so much for that. Next question, what would be a good credit score for buying a home? Okay, this is a common question too. And thank you for the question. What would be a good credit score for buying a home? I would say it depends on it. I smile because it's kind of lawyer speak. By the way, not legal or financial advice. It depends on your mortgage company. Certain mortgage companies have like a threshold, right? So they're looking for a certain number, a credit score number. I would say the higher your credit score, the better. Generally speaking, I think it's like 720 and above is like in the good category, right? Anything below is kind of in not necessarily good category. And I believe I could be wrong, by the way. Every mortgage company has their own definition of good and bad category. So I believe, like I said, I think it's like 700 and above, you're in good credit. Anything below may be bad, and so you're again things like affordability come into question, as well as approval, and of course how much a mortgage company will be willing to give you or authorize you for a mortgage. Some people I know, by the way, in my credit workshops are just numbers. They're like 20 points away from going, into good credit category. So check your credit score. I would not say check it often. I would say check it, understand that it might be good or bad, or maybe you might do some work, and then you can do a couple things, and then 6 months later come back and check it again, right? And so it kind of helps you see that progress. So great question, by the way. Next question. Is there a down payment percentage home buyers should strive for? Good question. Very good question. Not necessarily. It depends on, again, it goes back to what you're comfortable with. I'm always going to say, by the way, the most you could put down, but still be comfortable, right? Have enough saved for a closing cost, have enough saved for other emergencies, right? Don't just burn your entire emergency fund. Don't just burn all your 401k and other retirement accounts. Don't burn all that just to try to make a 20% or a 10% down payment. I would never recommend any of that. I would say put down the most you can that makes you comfortable, because the down payment does a lot of things. It does a lot of things. If you put down a large down payment, you're probably going to get better interest rates, right? Probably, again, depending on your mortgage lender. But in most cases, it'll give you a better interest rate on your loan. It could also give you better terms, right? You could also get a larger loan if you need to. But most importantly, a bigger down payment on a house usually makes your mortgage much smaller, right? There, in some very rare instances I can think of, that it might not make that big of a difference. But that's kind of what you're shooting for, because that's what at the end of the day, that's what you're going to be dealing with. A 30-year commitment, right? 30-year mortgage could be a 15-year mortgage if you want to get one of those, and they do have 20-year mortgages too. Those exist. But a 30-year mortgage is the most common type of mortgage. You're going to be sitting with a mortgage payment for 30 years, right? The more you keep that small and manageable, it's going to be something that you'll be, trust me, much happier with down the road. So yes, great question. Thank you. Any other questions, please submit it to chat. I know we have a couple minutes left, and what I will do, and I know a lot of other questions came through during our polls. I'm going to get to a few of them. So before that, I want to hit this up before we, so I don't forget about it. Here's some reminders. Next month, we have a couple different webinars. The first one is our student loan updates, what you need to know. Our special guest speaker is Selena Damien. She is the DFPI student loan servicing ombudsperson. She's going to be there talking about student loan and the new updates. And if you have any questions, jump on the webinar, throw in your question. We're going to answer that live. You can register with that link there, which will be in the slides, by the way. We do our next financial education webinar is about protecting yourself from holiday scams. Again, November 12th, right in the holiday season. Check out that webinar. We're going to talk about the gift card scams and all the other most charity scams, all the different types of holiday scams out there, and you're going to learn how to protect yourself. If you're not subscribed to our newsletter, please subscribe to us. That's probably where you heard about this webinar, but you're going to get notified at least once a month about all the different types of events that we're doing, as well as other webinars coming your way. And please subscribe to our YouTube channel. That's where we publish this financial education webinar, as well as many other content that we put out there. Okay, let me really quickly look at some of the questions that was spit in. Home seller, some home sellers have been offering rate buy downs. Is this a good idea? It depends, right? Rate buy down is sometimes something home sellers offer as a incentive for you to buy it. I would definitely check on it because all those offers are incentives they're not universal. Some of them are different. Some of them might be as simple as we'll just give you $10,000. Other times it'll be something like we'll take $10,000 off of the price. Other times what they'll do is they work with a lender, and if you work with that lender to get a mortgage to buy that house, there might be the seller will give that mortgage lender some money to buy down a rate, so it's a little more affordable. Again, there's too many details here. Is it a good idea? I would say do your research, right? Make sure that it works. Read the fine print. Just because it's a great incentive doesn't mean that it's going to be great for you. Good question. All right, one more question. I know we're a little past one. Let's see. What's a good question here? That's a good question. Okay, this is one that I hear about a lot. I'm a little worried about the home insurance issue. Should I be? I have a lot of friends and colleagues that work at CDI, that's the California Department of Insurance. They're amazing. If you have questions or worries, I definitely would encourage you to go talk to the California Department of Insurance. They're more than happy to. I would say the issue about home insurance is it's all about where you live, right? I know certain homeowners that live in certain wildlife areas, has a lot more trees. There's a lot more requirements when they buy a house, because that house has a lot of fire potential issues, right? I do know there are some homes, like my particular home is not that big of a fire risk, but I also have a lot of homes that are near me. So if one house catches on fire, pretty much the entire block is going to go up like matchsticks. So something to consider. I would definitely, when you are in your home buying process, right, when you're looking at homes and you're thinking about putting in an offer, talk to your insurance professional, right? If you have an insurance agent, if you have a car insurance company, right, they probably offer home insurance, and just ask them, hey, can you give me a quote? Like, I'm thinking of buying this house. Give me a quote on how much it would cost for insurance on this house, and you're going to learn a lot, right? And by the way, also shop for insurance too. But some insurance companies have a lot of risk things, and they're going to give you a high-end mortgage insurance quote, not mortgage, sorry, home insurance quote, and then some of them have less risk things. So shop around. I would not say for some people home insurance is a big issue. But for some others, it may be. And again, depends on where you live. It depends on what your home could be at risk for. So that's a great question. And with that, I do want to say thank you, everyone. Thank you for joining the webinar. There's a lot of really great questions. I wish I would have been able to get to you. But I hope this has been helpful. And with that, I want to say thank you for joining. Please take care of yourselves and each other. Have a great day. Bye.